Hi, I'm Heather with First Pioneers Federal Credit Union, and welcome to the Money Tips No One Told You podcast. Here at First Pioneers, we love helping you understand your finances better and giving you the tools you need to be financially successful. Here, we're going to talk about financial terminology, how different accounts work. We're going to share tips that make your financial life easier, and so much more. Are you ready to dive in? Today, what I want to dive into is mortgages. Mortgages just play such a significant role in your purchasing journey, obviously. And the questions we get asked so often are about loans, mortgages. How do I get them? How does this work? And there really are a lot of different programs out there that are available for you, but you just may not know about them. So I really wanted to get into that today. How do you find the right mortgage for you? So I thought maybe we should start with explaining what a mortgage is, right? A mortgage is a loan that enables individuals to purchase a home. It's a legal agreement between a borrower or the home buyer and the lender, which will typically be a financial institution like a credit union or a bank. And the mortgage is going to outline the terms and conditions of the loan, and that's going to include the interest rate and the repayment period and any other essential details that you might need in there. The great thing is there are several mortgage options available to folks that want to buy a home. The most common types include fixed rate mortgages and adjustable rate mortgages. Those will often be referred to as an ARM. So keep that in mind. A fixed rate mortgage offers a consistent rate throughout the life of the loan. It's going to stay the same. So what that's going to give you is a more stable and predictable monthly payment. Little caveat there. One thing that is part of your mortgage payment is your insurance on your home. That can change from time to time, which may cause your payment to adjust slightly. But the mortgage part of the payment, the interest rate part of the payment, will not change if you use the fixed rate mortgage. Now, for an adjustable rate, on the other hand, those usually have an initial fixed rate period. Typically, the first few years are going to have a fixed rate. After that, the interest rate adjusts periodically based on the conditions of the market. So I really want to caution people on this type of loan. In the beginning, it may be really helpful and it may be the best way for you to qualify for a better rate. But when it becomes variable, you are at the mercy of the market. And we've all seen what interest rates have done this past year in particular. They have really climbed high. And you may be lucky. Interest rates may fall. And then in that case, you would actually save some money. But it's really a fairly risky way to go. And if you do choose to go this route, what I recommend again is that you plan to try and refinance to a fixed rate before that periodic term goes into effect on the loan. There are a few other things to think about as well as you start looking at mortgages. You want to carefully evaluate the interest rate, the loan term, and the cost associated with the loan. The interest rate is going to determine the overall cost of the loan. So obtaining the best rate is really essential. And we've discussed this before. Your credit score can play a big role in your rate. A lender is going to look at your credit report as well. So take a look at your report and work on any of the issues you need to clear up before you apply for the loan. If you refer back to our credit episode in season 1, we get a little more in depth on all of that, and maybe that can help you out on what to do to clear up your credit and to look at your credit score. A loan term can range from 10 to 30 years. And of course, that amount of time will also affect your monthly payment and the total interest that you pay over time. So that's something to consider as well. A longer term, you're probably going to have a little bit smaller monthly payment to make. Shorter term, of course, you would have a little bit higher payment each month. But with the shorter term, of course, you would pay your home off a little faster. So that might be worth it if it's something that works in your budget. Homeowners should also consider closing costs, down payment requirements, and potential mortgage insurance if that's applicable to the type of mortgage that you're getting. So when you're assessing the affordability of a mortgage, those are all things that you're going to want to look at. Now, we talked about those things in the last episode as well, so you can go back and take a listen there if you need to. And those costs will be largely dependent on the cost of the home that you choose. So again, all of these costs are sort of connected to each other. So as you know your home cost, then you'll have a better idea of what your closing cost will be and what your down payment requirements will be. And then the type of mortgage that you qualify for will tell you what kind of mortgage insurance you need. So, like I said, they're all connected and all things to be considered. When it comes to rates, as we've said before, those are going to change from time to time. And of course, you want to secure the most favorable rate you can for your mortgage. So it's always a good idea to, shop around to various lenders and see what rates are available for you. It's also a crucial piece of the puzzle to really understand your financial situation and your long-term goals. Take time to assess your budget. Consider potential future changes in your income and understand the potential impact of your mortgage payment on your overall financial stability. You need to make sure that you're financially ready to take this step. So now I want to take a minute to go over some of the loan programs as well. The first is the Federal Housing Administration loans. You may hear people say FHA. In fact, if you're a first-time home buyer, you may hear FHA a lot. The FHA is part of the U.S. Department of Housing and Urban Development. That's another acronym you may hear a lot, HUD, H-U-D, HUD. And they provide various mortgage loan programs for Americans. The thing about an FHA loan is that they usually have lower down payments required. It can be as low as 3.5%, and they're often easier to qualify for. And let me back up. When we say 3.5%, we mean of the purchase price of the house. So you would take the purchase price of the house and figure out what the 3.5% of that is. So now back to FHA. They will require mortgage insurance. It's called a mortgage insurance premium. So you need to keep that in mind. It becomes part of your monthly mortgage payment. And there is also a limit to how much you can borrow on an FHA loan. So consider the cost of the house you're looking at if you're looking at an FHA loan. Then there are what's called conventional loans. These are typically fixed rate mortgages like we talked about before, if you remember that one. It means your interest rate does not change during the life of the mortgage. Now, these are a little bit more difficult to qualify for. They're going to require also a little larger down payment. Often it can be around 5% for that. But keep in mind there are some programs for buyers who qualify that can help you get that down to as little as 3%. So you may be able to work with that a little bit. A conventional loan will usually need a higher credit score and lower debt to income ratios. Now, if you're a veteran, you may qualify for a VA loan. These will have more favorable terms. There's no down payment required. They may be a little bit easier to qualify for. Now, they usually do have a max limit on that. So again, keep that in mind depending on the price of the home that you're looking for. And of course, you're going to need to determine your eligibility with the VA. But if you're a veteran, it might be something worth looking into. This might be a great program for you to try. There's also a USDA loan. And we don't see those as often kind of anymore. These are guaranteed by the USDA and they can be financed at 100%. The caveat on this loan is that the property must be in USDA designated areas. And if you're within the city limits, that's just probably not as much of an option. Now, maybe if you're outside, there may be more areas that can fall under that designation. And that was started years ago when there was more of that type of land available. But it is something to look at. It may be in an area where you are looking to buy. So absolutely take a look at that program. Be aware, though, there are income limits that are going to apply with this loan. When they look at the income, they're going to look at household income. So maybe you're married, you and your spouse. If you have a 19-year-old, a 20-year-old in your home that's working, but they live in your home, their income is going to be counted as well. So that's just something to keep in mind there. But it is an interesting program to look at if it fits your needs. So hopefully this gives you a little more of an idea of what's out there and what's available to you, and some different programs that you might be able to consider as you look for your mortgage. And of course, as always, I say it every time, don't hesitate to ask questions and get some help on this journey. A mortgage professional can provide you with personalized advice. They can look at your situation, your finances, and what's going on with you, and help you truly make an informed decision. So be sure and reach out whenever you need us. We are always here to help. Thank you so much for listening today. We hope you found this information helpful, and we'd love it if you'd give us a rating. And don't forget to favorite or subscribe to the show. There are several ways you can find us if you need further information or you need to speak with a financial counselor. You can visit us in person in Lafayette or New Iberia, Louisiana, or you can find us at firstpioneers.com. There you can find out how to become a member of our family and find out other financial information. Be sure and check out the show notes for important links and other information. And as always, we're here to help in any way that we can. We hope you have a great day, and we'll see you next time.